Christopher and Greg ready to roll. Roots Real Estate Group, good to see you guys. Last time I saw you, we were on the golf course, and they almost had to cart me off. It was so hot at UGD.
It got warm out there.
We were hydrating, giving protein bars.
I'm like, is there anything at the turn? The turn closed, and he came through with a couple protein bars for me to save the day, which is amazing.
I was riding with him, too.
Right?
He was about to crash.
I really was. Speaking of crash, there you go. Great. I love that transition. That's how we do it here. Are we waiting for the housing market to crash? I think a lot of people out there are. And, is it going to? Tell us a little bit about, what people are thinking here.
Sure, man. The market's not going to crash because we want it to, right? I mean, we hear it on social media, we hear it in our news media just across the country. But something would fundamentally just have to change. I mean, we'd have to have more homes, more supply. I mean, what's driving our pricing right now and driving our market is just a limited supply. We have more people that want to buy houses than we are building houses, or even homes are being sold. So without a fundamental change in what we're doing in the housing market, it can't crash.
Yeah, it can't crash.
And there would have to be economic conditions, too. We'd have to have forced selling conditions.
Yeah.
Where it's either a recession or people are losing their jobs.
Okay.
So, by all accounts, the economy is showing strong indicators. So we're not seeing a lot of jobless situations.
Right. And when we say crash, what are we talking about? Like if it were to happen and all these things did to line up and things, does the price just come straight down? Rates just come straight down fast? Or how does that even work?
Yeah, so I think when we think crash, we think of that 08 market, right? That's our most recent where prices just plummeted, right?
Yeah.
We're seeing corrections across the country right now. We're seeing them in Tennessee. We're seeing them in a lot of places where a lot of California moved to during that COVID market, and now maybe are moving back, or maybe they're just not spending as much as they did in that market. So we're seeing correction there, but we're not seeing crashes. We're even in Sacramento, we're seeing a little 2% growth versus where we were like a 4 to 5% growth. So that's a correction.
Yeah.
But we're still seeing growth year over year. Every year for the last 5 years has been higher than the year before, even in this crash that we're in right now.
And we are in a housing demand shortage.
Okay.
Oliver, we talk about it all the time.
Yeah. The numbers show
we may never catch up.
Yeah.
Oh, really?
Correct.
Wow.
Yeah.
Because the builders, even if they're building and they're adding and all that kind of stuff, people think at that point there might be a price drop, but that's not the case.
So, if you look at the numbers, in the 1970s, it's kind of the best. We're building about 2 million homes a year.
Okay.
We're building about 895,000 a year now, single-family homes. We're building some other stuff, but we're building half what we used to build. Our population has gone up by about 140 million since then. The demand is growing, and we just can't keep up with the build. And so much of that is related to just regulations and the time to build now, right? In the 1970s, you could build a home in 3 to 6 months. Now you're 3, 6, 8 months of paperwork.
Yeah.
Before you're gonna start swinging a hammer.
Yeah.
Jeez.
And the process too. These builders are smart. So, it's not like they just build all 300 and then boom, release them to the market.
Yeah.
This could be 3, possibly 5 years, and if it's slow demand, they're going to slow their building. Yeah. So the absorption it'll take place over a longer period of time.
Yeah.
So it won't just flood the market.
So I think a lot of people might be getting this information from, the national headlines and things like that too. We really shouldn't trust the national headlines. You can, they're out there, but kind of break it down to each smaller community and area. So what should we do to that? Just not really pay that much attention to what we're hearing nationally?
Well, even within the greater Sac region, we have different pockets. So like a builder that's in Roseville right now, just releasing 300 homes, say the plan is for 300 homes.
Right.
That doesn't really have an effect on the competition with ESAC or Land Park. We have micro markets that really don't affect each other, even right here. So think about spread across the United States. It's all over the place.
Yeah.
What if they're saying, hey, you know what, I'm going to wait 1 more year for these rates to get lower and prices to get lower. I'm going to keep waiting. Before you know it, they've waited like 3, 4, 5 years, right?
Yeah, so
Should we wait?
I don't think you can, right? We have a really good tool called the cost of waiting calculator. I think we're going to share it here. But it shows that what it costs you to wait 1 year, right?
Yeah.
So just the tax savings alone is about $20,000.
$600,000 purchase, you put 10% down, you get 6% interest rate, 4% appreciation on the home over the next year. You're married, that's your income. What's that?
About $24,000.
Yeah, $24,000 in appreciation. I think another $7,000 in tax savings.
Yeah.
And then I think it ends up being about $30,000 in total wealth built.
Yeah,
between
that's amazing.
Principal pay down.
1 year.
I love these tools that you guys have. All right, well, unfortunately, we just ran out of time. We're out of time, but we're going to do this again. We do it every Wednesday. And if you need more information, you can follow these guys. Go there if you're in the house or in the market for a house. You're selling a house, buying a house. These guys will take care of you. Guys, thanks for coming in again. Let's set up some more golf. And in the meantime, we'll go over and throw a little information on the screen to go do this. There it is right there. Roots Real Estate Group. But we got to make it where it's a little bit cooler. cooler, not so hot. I was dying out. I didn't even make 17 and 18, barely. He had to drag me through that. Yeah, there you go. That's going to be cool.